Aloha, welcome back to the conclusion of problem CP12-4 / CP12-6 on cash flow statements. What I did was I edited a section of the previous lesson. I was going to go into the text and try to explain this statement by referring to the text, but I thought it would actually be better if I just put it up on the flip chart and went through it. So if you recall, we completed all of the T accounts, and we ended up with the cash account, which reflects all of the totals that show up on the statement of cash flows anytime we prepare the statement of cash flows using the direct method, which is what we use here in this course. So the debits are positive amounts. They show up as cash provided. The credits are negative amounts. They show up as cash used. The beginning balance in our cash account at January 1, 2010, which again was the December 31, 2009 ending balance, is $8,000. We add the debits, subtract the credits, and we end up with our ending balance at December 31, 2010 of $12,000. So let's see how this information is transferred to or translates to the statement of cash flows. And this is a relatively simple example of a statement of cash flows. Just like all of our other financial statements, at the top of the statement we show the company name, the name of the statement, which is statement of cash flows. And just as for the income statement and the statement of owner's equity or statement of shareholders' equity, the statement of cash flows always looks at a period of time. In this case, the year ended December 31, 2010. Keeping in mind again that the balance sheet is always as of a specific date, usually the end of the accounting period that is being reported on. What I've done here is use different colors to show the three different sections of the statement of cash flows. Remember that we classify or categorize cash flows according to three different criteria. The first would be operating activities, the second is investing activities, and the third, which shows up on the next sheet, is financing activities. So let's go through these one at a time. We start out with operating activities. We hit it up with a title that says cash flows from operating activities, and then we list our various cash flows from operating activities, either positive amounts or negative amounts in parentheses. So we have cash collected from customers, we have cash paid for wages, cash paid for operating expenses, and cash paid for income taxes. We would simply add down, again either plus or minus, and we get a total which in this case is positive. So the description for that total is net cash. Net would be the net of pluses and minuses. Net cash provided, since this is a positive amount, from operating activities, and that number is $3,000. And you might note that your operating activities reflect the primary purpose of the business itself. What is the business selling? What is its product or services or services? And what expenses are being incurred as those services or products are being sold. So operating activities is an important category, and we like to see a positive amount at the bottom of this category. Of course, the bigger the better. The second classification on the cash flow statement is investing activities, and so I've used red here to show those, and there's only one item, but we hit it up just like we do for the previous category, operating activities. We hit it up and call it cash flows from investing activities. There was just one item, cash paid for equipment, and then we show the total again as net cash used. Net cash used because this is a negative amount from investing activities. And then normally we would just continue on down, but we're out of room here on this sheet, so we can go on to the next sheet. And we are looking at the third category on the statement of cash flows, financing activities. And so again, we headed up cash flows from financing activities. Again, as for investing activities, there was only one item, cash proceeds from bank loan. So we made a loan from the bank. We borrowed $2,000, so this is a positive amount. And again, our total for that section would be called net cash provided, since this is a positive number, net cash provided from financing activities. At that point, we would add the totals from our three sections. So we have a positive amount, cash provided, positive amount from operating activities. We have a negative amount, net cash used from investing activities. And then for financing activities, we have another positive amount, net cash provided of $2,000. And so we add the $3,000, we subtract the $1,000, and then we add this $2,000 to get the net increase in cash for the year of $4,000. If the negative amounts would have exceeded the positive amounts, then this would be called a net decrease in cash. But again, we're positive, so we have an increase, and the total is $4,000. And the next thing we do is add the beginning balance of cash. We got that from our problem information, and again, it also is reflected in our cash T account. Beginning balance $8,000. So we add the beginning balance to the net increase for the year, and that results in our ending balance of cash at December 31, 2010 of $12,000. And so again, this is a fairly simple example of a statement of cash flows. Problems CP12-4/CP12-6. I hope you found this example helpful, and we'll be moving on from here to the next chapter. Thanks for your attention, and we'll be back shortly.